Clearly, look, it's been a tough 6 to 9 months. 2Q, I think, is the turning point, not just from a delivery perspective, but now going into historic robo-taxi day and autonomous. I believe the AI story alone is worth $1 trillion potentially at Tesla.
And Dan, robotaxi, it's great to see you. It's Josh. I get the excitement there, Dan, but that is that's a long-term play, right? It would be a while before you would expect to see any kind of, meaningful financial contribution from that, right?
Yeah, look, Josh, I think in the next 18 to 24 months, we'll have some form of supervised robo-taxi in certain cities, in my opinion. I think given where China is going on FSD autonomous, I think the technology is getting closer and closer to something that when you look at the longer term Tesla story, I've never viewed as an auto company. Disruptive tech, despite some of the issues they've been through from a demand perspective. But take a step back, you're going to have 6, 7, 8 million cars on the road, Teslas, that are now going to have that autonomous FSD. And I think it's very important to understand forest for the trees. This is essentially an AI robotics disruptive play, but yet the bears in their hibernation caves will continue to say it's a car company.
Wedbush Securities Dan Ives just made some stunning comments on Tesla and Tesla stock, reiterating that Tesla's AI story on its own is worth a staggering $1 trillion. Notably, Ives's comments came after the EV leader reported better than expected deliveries in Q2, sending its stock 30% higher. Ives also raised his price target on Tesla stock to $300 from $275 and said that he even sees the stock going to $400 next year. And it's not just Dan Ives who's really bullish on the automaker, as Stifel analyst Stephen Gingaro, who covers the EV sector, recently picked Tesla stock as one of the best EV stocks to buy in the current environment. In today's video, we're going to talk about these analysts' opinions, as well as why Tesla stock is a no-brainer buy before the company's upcoming earnings and robo-taxi day. But first, if you want to keep up with Tesla's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
One of the big issues, though, for Tesla over the last several quarters has been the cars and demand and what they need to do in order to spur that demand. I guess, has that part of the equation, has that part of the story changed at all? Or are we starting to see, or do you think we're going to see a real pickup in EV demand, and what's driving that?
Yeah, I think the price cuts, 98% of that is in the rearview mirror. So I think we've started to turn the corner there from a price cut perspective. Demand stabilized. China, headwind, now that becomes a tailwind. I think numbers go higher in the street. And I think you start to now see, it's not just about the robo-taxi day and the start of that vision, but I think now growth returns to the Tesla story. And even though they've been on the outside looking in of that Mag 7 party, I think they start to get back on the dance floor.
And Dan, what about the lower price models on the way? What do you think the price is? How excited do you think investors should be about that?
Yeah, Josh, I think that's going to be key from a volume perspective. I think 28,000 to 30K is sort of where we see that. I think they'll give some hint of that on August 8th, but that's key to the volume game playing out in Tesla. In terms of the broader volume, then it's the software, and then ultimately it's really the autonomous FSD. That's the sum of the parts to how you start to get to that bull case, $400.
Dan, one of the near-term catalysts that you laid out there is robo-taxi day. And I guess I'm curious, what does Tesla need to announce, or what do you expect Tesla to announce to have this historical moment, as you put it?
Well, I think it's really showing the technology. I mean, this is, because ultimately the carrot and the stick here is, does Uber, do they partner? In other words, like down the road, is this something where 5-10% of Ubers are actually using autonomous FSD?
Dan, do you think that's likely?
I think it's very likely. And I think it's something where in the next 3 to 5 years, I could see Josh in New Jersey getting into an autonomous Uber with no driver.
Dan Ives believes that Q2 will be a turning point for Tesla, and Stifel analyst Stephen Gingaro seems to agree with him. In a recent note, the analyst said that Tesla is very well positioned to deliver robust multi-year growth from the year 2024 to 2027. He noted that in the near term, the revamped Model 3 and upcoming Model Y refresh should bolster sales, followed by the commencement of Model 2 production that likely garners very strong demand. In addition, Tesla's FSD has the potential to generate significant value through both sales of the software, possible licensing agreements, and as a critical part of longer-term robotaxi initiatives, according to the analyst. These comments support Jingaro's buy rating on Tesla and his bullish $265 price target. I find myself agreeing with the two analysts here, as Tesla is currently disrupting the entire automotive industry, and the upcoming robotaxi day will literally change everything about the company. According to Fortune Business Insights, the global market for autonomous vehicles is set to grow to a $13 trillion valuation by 2030. So if you think that Tesla stock's recent jump was insane, just wait for its move after the robotaxi unveil. It could actually go to $300. With this in mind, let's talk about why Dan Ives thinks Tesla is the most undervalued AI play in the market right now. Hello everyone, and welcome back to Investocracy.
Hey, near term, Dan, also, though, more near term, July 23rd, Q2 results for Tesla. What do you expect there, Dan? What are the metrics you're going to be making a beeline for?
I think the profitability metrics are going to surprise on the upside. I think if you look at the storage, the software piece, higher margin, that's significant, along with some of those tough cuts they've had to make in terms of cost cutting. Profitability preserved. You now start to see a resurgence from a cash flow and EBIT perspective. I think that's also why the stock's rallying here, is that it was sentiment, and we talked about it, the last 3 months, sentiment's so negative. Unless you thought there was something structurally wrong with the story, I think the stock was just due to go higher. And now, many of those bears that talked about 100, now I think, we're going toward 250, 300.
On that earnings call, though, Dan, did you also want to hear more about how business is going in China, more color and commentary there?
Well, China is the hearts and lungs of the Tesla story. And that's also why Musk has made some of those trips to Beijing, because that really went from a headwind to a tailwind. Now, I think we're starting to see a mini rebound in China. That's significant in terms of the broader bullish Tesla story. Tesla doesn't go higher without China growth coming back. And I think it's starting.
Dan Ives believes that when you consider Tesla's FSD and autonomy, you'd realize that the company is the most undervalued AI play in the market, and he said that when he appeared as a guest on Bloomberg Radio. We have to agree with Ives here, as FSD is a truly game-changing software that'll definitely end up saving many lives. In fact, according to a recent report from Tesla, the company noted a significantly lower number of crashes with FSD engaged in 2023 than in 2022. The company reports that the number of vehicular accidents per million miles driven with FSD engaged amounted to 0.21 in 2023. That's a 32% improvement over 0.31 in 2022. Ives also said that Tesla's upcoming robotaxi day will be historical for the company, and we have to agree with him here. In fact, ARK Invest predicts that robotaxis will account for 90% of Tesla's business in the future once the company has a fully functioning network. And in addition to autonomous vehicles, Tesla is also in the midst of getting its humanoid robot, Optimus, ready for the mass market, and this is expected to happen in 2025. But while these new technologies aren't ready to get out there on a large commercial scale just yet, investors should keep in mind that Tesla has made some notable progress. For example, Optimus is already being used in Tesla factories, showcasing its potential to enhance efficiency and reduce labor costs across all kinds of industries. So, with all of this in mind, is now the time to buy Tesla stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make. So if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
What about the pressure, though, from domestic players there, just in terms of the competition, the fact that they are able to offer these vehicles at a fraction of the price? Is that going to be something that's going to hold back some of Tesla's growth?
Yeah, look, that's going to continue to be that Game of Thrones battle that Tesla sees domestically in China, BYD, NIO, XPeng, and others. But it's not a zero-sum game. I mean, I believe BYD will be a winner, just like I think Tesla's a winner. I think Tesla as a global winner. But the gold at the end of the rainbow is autonomous FSD. Like if you're playing Tesla here, you're playing for the broader vision. But I would just say, look, everyone viewed NVIDIA just as a chip company a few years ago. Apple is just a smartphone player 4 or 5 years ago. Microsoft is just a software player. Look where we are today. That's why in this AI party, we believe it's only 9 p.m. in a party that goes to 4 a.m. And Tesla will be a part of that.
Right now, there is one EV trend that all Tesla investors should be aware of, and that is that the EV market continues to grow, even if growth rates keep fluctuating. For example, last year, EV sales in the US jumped 60%, from 1 million in 2022 to 1.6 million in 2023. And to put that into perspective, in 2016, only 200,000 EVs were sold in the country. That's 8 times less than the number sold annually today. We can't deny that gasoline vehicles continue to dominate, as they account for 75% of total vehicle sales in the US. But so far in 2024, EV sales continue to increase, both in the country and in the entire world. In fact, the global EV market is projected to grow to $1.5 trillion in 2030, exhibiting a compound annual growth rate of 17.8% from 2023 to 2030. So, being an EV leader both in the US and globally, Tesla stock might be the safest bet out there if you want to capitalize on this growing industry. Keep in mind that Tesla is the only American EV company that actually makes a profit selling its vehicles. In Q1, Tesla reported top-line revenue of $21.3 billion, missing forecasts by $950 million and declining 8.5% year-over-year. Meanwhile, at the bottom line, Tesla reported a 45-cent non-GAAP EPS profit, 5 cents per share less than had been expected. These misses reflected a difficult sales environment for EVs, but as the market normalizes and Tesla releases its more affordable models over the next few years, the company's revenue will definitely increase, and in turn, its stock price. But what do you think about Tesla stock? Is it a buy at the current price? Let us know your thoughts in the comment section, and don't forget to tell us what your valuation for Tesla is. If you would like to know what companies like Tesla have been up to these past few days, go ahead and click on the next video on your screen. See you there.